Hello, I'm Jeff Tennant, and trading is closed on June 29th, 2015. As usual, let's go over my calls from over the weekend. I said the most likely scenario after Friday's trade was a gap outside of the day's range, which turned out to be an understatement. I said unless we immediately invalidated this last rally by gapping down and taking out that low, this was good support and we should have a good rally. Well, that was before the news about Greece came out. We gapped down, undercut the low, which is what the bears had to do. And of course, when support breaks, it breaks in a big way. Now, when you gap down like this and just drop all day long in a slant, it isn't sustainable. But when you go up first, it certainly is. We had a few mejt targets. We had one of 2106.60, which we didn't come close to. We had one of 2095.37, which was hit immediately. What's interesting is we had some targets based on the system I've been looking for since the middle of June. We had 2083.25, which was a great short-term support, and we had 2090.93 as resistance, right on the nose. During the day, mejt said ultimately lower prices would print, which they did. It said this rally and that drop are both false moves. It gives us a target of 2071, most likely to print tomorrow. This 2052.87 is an old target from back in April. Before discussing if the higher target's going to print, let's discuss the significance of today's drop. Here's the third. Let's start with this. We had an FOMC whipsaw target that we would undercut 2057.03. We did pretty much right on the nose. So that target we've had since the day of the announcement has been satisfied. This is 1, 2, 3 trend lines breaking. According to McGee and Edwards, that means that the rally's over. It's still possible to invalidate this move. If we take out today's high promptly and we do not go down at least one tick from today's close, that would invalidate the move. I think that's extremely low odds. This is calling for the end of the bull. This is the monthly chart. If we close tomorrow under 2104.50, which looks like a slam dunk that we will be on a mejt sell signal on the monthly chart. This is a pattern which started on November 2012, when the pattern has bars that are this long, a month, and when a pattern which lasts this long, over 2.5 years, it's a sign of a very major top. It would not be uncommon if we undercut this TDST line at 1343.35. You don't get many TDST lines in a monthly chart. They take almost a year to form. They take 9 months to form. We've only had 3 of them since the rally started in 2009. One thing DeMark doesn't mention in the book is if you draw a Fibonacci grid and you connect the lines, this is 14.6%, and that's 38.2. When you get to 100, you get a pretty good idea of one possible place for the rally to end. Of course, by the way Fibonacci stuff works, this doesn't have to be 100. It could be something like 61.8, and you get a high much higher, but at least it tells you where to be on the lookout. Here is a break of this purple trend line. According to the mark, the sustainability criteria are met, and we should drop to at least 1957. Ideally, that line will hold, but it's not required. One of my rules is if you have a trend line sloping up and you break it in a straight line move, at some point you should return to the trend line. That means we should recover to at least 2080. If we do it tomorrow, that's where the trend line is. Will the higher mejt targets print? Well, these are all the targets that weren't satisfied last year. We had one target that was satisfied this year. You'll see what a perfect support level that was. All the other targets tended to be at times of market lows. Let's see if I can do better with that chart. It's hard to move this chart around, but this is a low here. Let's see if I can slide this. This was a low. These prices and these prices were where we had failed targets, and these here were doing strong, and we're in the middle of a strong impulsive move. So these higher mejt targets, according to the rules, don't have to print. We have these two, and we have one from earlier in the year. And if we've topped out, it's close enough to a major high. And if we have a strong enough impulsive move down, I wouldn't wait around waiting for those numbers. We don't have much more on the downside. We have this one and one from 4 months ago, and for 2015, that's it. So we have some targets for tomorrow, 2071. When the market's dropping like this, I take all higher targets with a grain of salt, especially when the rules allow failed targets close to the high. I think it's far enough away from the high so it'll print. It doesn't have to print tomorrow, but that's the most likely time. If we continue dropping, here's a support level at and below 2052.87. So we're looking for perhaps slightly higher, a lot lower with a decline that's going to last years. And that is today's call.